Robschild. Nothing I say is investment advice. Welcome to the show where we view financial markets through crystal ball gazing. JP Morgan once said, "Millionaires don't need astrologers, but billionaires do." And so we begin. Today is March 2nd. Sorry about missing the video yesterday. I'm just going to be doing that video today. Not much data came out on Friday that was of much importance. One interesting thing I wanted to note was the consumer sentiment final, where the previous was 79.6, median forecast was as expected, and it was actually the 6 and the 9 flipped. You gotta look at it a little carefully, but 76.9 being the actual. So consumer sentiment being a little lower than expected, that's typically bullish for markets, and lo and behold, the S&P 500 is up on this Friday, March 1st. As me and my crystal ball have been saying, this is looking very bullish here. No reason to break down. We're in the, if you put on the Bollinger Bands or in the top part of the Bollinger Band, we're just going to keep hitting it and buying on the breaks, obviously. And this little flag pattern breaking out, everything was looking bullish from Thursday's setup, and it played out very, very strongly. On the day we're up almost a whole percent, 0.8% on the S&P 500. I had also been mentioning high yield corporate. This is higher risk bonds. This is like the risky smart money that I like to define it as. If we use this trend line right here, I had been talking about this, and perhaps being inside this flag, and we really broke through it yesterday. So a lot of support from the bond market going into Friday. Things are looking as bullish as can be. Moving on, XHB, another all-time high. This thing just keeps climbing and climbing. People think that home builders are just going to make lots and lots of money. Just build homes and you'll be rich. Apparently, that's what market participants in this market believe. This is a decent leading indicator of markets. This is looking very strong here. On the VIX, I had mentioned this trend line that we kept hitting. We've hit it for the 1, 2, 3, 4, fifth time. So, we could see a bounce off of here. But as some great chartists note, every time you hit a line, the weaker it gets. And so, and sometimes, crystal ball-wise, they tend to be on the 7th hit. So we might hit it 2 more times before breaking. But really, after today's strength and people digest everything over the weekend, my crystal ball says this VIX is breaking down, and we will be continuing higher into the next week. We see even more support in the Treasury yields. This is the 10-year Treasury yield. When it goes down, the value of the Treasury yield, notes go up. We had a breakdown. I had been talking about this flag for a while. My expectation was for this to be breaking up, in coinciding with the 30-year bond up to the around 4.7 to 4.8 area. This is starting to look like that idea is breaking down. This looks like I am not sure anymore if we're going to get to this area. If I was a day trader gambling on this, I would have been stopped out here. I would have gotten out of this trade. And so, this candle indicates we are probably headed lower on yields, giving even more support to the equities markets. Last thing, one of the lists I like to check every day through my tabs. What I do is I have a folder. I press the middle button and it opens all tabs at once, and I just press Control W. I close them. I glance at them sometimes just for 5 seconds each to see what really sticks out to me. And this is really the another thing that's sticking out to me. I mean, it's Saturday, so it's more expected to see equities be less interesting, but all of a sudden we're seeing a lot of interest in meme coins, or alt cryptocurrencies. This represents, really the dumbest money on the planet. And so, this, which can control markets. It can be controlling of markets until they run out of money, and then things can crash. But for now, the game is risk on. Risk on, risk on, risk on. Hope you enjoyed today's show. Thank you for watching. Robschild.